Given the bullish price forecast for Bitcoin and the potential for reaching the resistance level, the investment strategy suggests a long position. The entry price should be set at $99,800, allowing you to buy in before the price potentially surpasses the resistance. To manage risk, a stop-loss order at $97,200 is recommended, protecting your investment from significant losses if the price drops unexpectedly. The target price is set at $103,000, aiming to capture a substantial profit if the price continues its upward trend and reaches the projected resistance level. This strategy prioritizes capital appreciation in the medium term, capitalizing on the anticipated price increase over the next few weeks. The entry and exit points are strategically chosen to align with the price forecast and support/resistance levels, maximizing the potential for returns while mitigating risk. Given the price trends and forecast for Bitcoin Cash, a medium-term investment strategy appears suitable. The historical prices demonstrate a general upward trend, but recent fluctuations suggest some consolidation. The forecast indicates a slight dip in the short term, followed by a potential rebound. This pattern suggests a buying opportunity at a slightly discounted price. Therefore, an investment strategy for Bitcoin Cash involves taking a long position. A suitable entry price would be around $540, aligning with the recent price action and the dip predicted in the forecast. The stop-loss should be placed slightly below the recent support level of $523.90, around $520, to minimize potential losses. The target price could be set at $580, aiming for a potential upside based on the forecast and historical price movements. This strategy allows for capitalizing on the potential rebound while managing risk through a defined stop-loss. The provided price information for stacks suggests a slightly bearish short-term outlook. While the historical prices show a general upward trend, the recent 2-week price change indicates a slight decline, and the forecast suggests a continued downward movement in the coming week. The support price at $2.334 acts as a potential floor for the price, while the resistance at $2.72 presents a hurdle for further upside. Given these factors, a short-term short position on stacks appears to be the most suitable strategy. An entry price of $2.45, close to the current price and slightly above the support level, allows for a conservative entry point. The stop-loss should be set at $2.51, aligning with the forecast's highest predicted price, to limit potential losses. The target price could be set at $2.33, aiming to capitalize on the predicted downward movement towards the support level. This strategy aims to profit from the short-term bearish sentiment while managing risk effectively. Given the price trends and forecast for Ethereum, a moderately aggressive investment strategy would focus on a short to medium-term approach to take advantage of the potential upward momentum. The historical prices show a general upward trend with some fluctuations, indicating a volatile but positive market sentiment. The current price is near the forecast, suggesting that the upward momentum might continue. The support price is at $3,628.50, providing a safety net for potential price dips. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level of $4,005.51. An entry price of $3,850 would be a good starting point, aligning with the recent price action and the forecast. The stop-loss should be set at $3,700 to limit potential losses if the price drops unexpectedly. The target price should be set at $3,980, allowing for a healthy profit margin while still leaving room for further upside potential. This strategy aims to capture a portion of the anticipated upward movement in Ethereum within a relatively short timeframe. Based on the provided information for Ripple, a short-term investment strategy appears most suitable. The historical price data demonstrates a fluctuating trend, with recent fluctuations suggesting potential volatility. The forecast price indicates a slight upward movement, but the overall trend remains uncertain. Given this ambiguity, a short-term approach allows for capitalizing on potential price swings within a limited timeframe. To execute this strategy, we can consider entering a long position at the current price of around $2.37. A stop-loss order should be placed at $2.2056, the support price, to minimize potential losses. The target price could be set at $2.6028, the resistance price, aiming to capitalize on the potential upward movement. This strategy allows for a balanced approach, taking advantage of potential upside while mitigating risks through a well-defined stop-loss level. Binance Coin exhibits a volatile price history, with fluctuations ranging from $647 to $750. The recent 2-week price change suggests a general upward trend, supported by the forecast which predicts prices to hover around $719 to $726 in the coming week. The support price at $676.79 acts as a safety net, while the resistance at $750.11 presents a potential ceiling for short-term gains. Considering this information, a medium-term investment strategy appears most suitable for Binance Coin. An entry price around $705, close to the recent price action and slightly below the projected average forecast, would allow for potential upside. The stop loss should be placed at $688, below the recent dip and the immediate support level, to minimize potential losses. The target price could be set at $736, aiming for a profit based on the historical high and the projected upward trend. This strategy allows for capitalizing on the anticipated price increase while managing risk effectively. Given the price trends and forecast for Stellar, a cautious investment strategy would focus on a short-term approach to manage potential risks. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests Stellar could drop from its current price to around 45 cents. The support price is at $0.0971, while the resistance is at $0.5543. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve entering a short position at 50 cents, aligning with the current price and the forecasted decline. The stop loss should be set at 53 cents, protecting against any unexpected price recovery. The target price should be set at 45 cents, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the short-term downward momentum while managing risk through a defined stop loss. Given the provided price data for Toncoin, a cautious yet potentially rewarding investment strategy could involve a long position with a medium-term investment horizon. The historical price data shows a slight upward trend, with recent fluctuations suggesting consolidation. The forecast indicates a slight dip in the coming week, presenting a potential buying opportunity. Entering a long position at the support level of $5.645 allows for risk mitigation while aiming for an upward price movement towards the resistance level of $6.795. A stop-loss order placed below the support level at $5.50 would help limit potential losses if the price declines unexpectedly. The target price could be set at $6.50, aiming for a moderate profit within a few weeks. This strategy balances risk and reward, taking advantage of the potential for upward momentum while protecting against significant downside movements. Given the Cardano price history and the provided forecast, a medium-term investment strategy appears promising. The historical price data shows a fluctuating trend with a general upward movement. The forecast suggests a continued upward trajectory, with prices potentially reaching around $1.22 in the coming weeks. This indicates a bullish outlook for Cardano in the medium term. Therefore, a long position is recommended for a medium-term investment strategy. An ideal entry price would be around $1.19, aligning with the recent price action and providing a buffer below the support price. The stop loss should be placed at $1.0737, the identified support price, to minimize potential losses. The target price can be set at $1.23, aiming to capture a portion of the projected price increase while staying below the resistance level. This strategy allows for potential capital appreciation while managing risk effectively. Litecoin shows a volatile price history with both upward and downward movements. The recent 2-week price change reveals a slight decline, but the forecast suggests a potential upward trend in the coming week. Considering the support price of $104.77 and the resistance price of $134.87, a medium-term investment strategy appears suitable. I recommend a long position on Litecoin. The entry price should be around $115, strategically placed above the recent price action and below the resistance level. The stop loss can be set at $105 to protect against significant downside risk. The target price should be $130, aiming to capitalize on the potential upward momentum and stay within a reasonable profit range. This approach allows for potential growth while managing risk effectively. Given the price trends and forecast for Doge-Coin, an aggressive investment strategy would focus on a long-term approach to capitalize on the upward momentum. The historical prices show a consistent upward trajectory, with the current price close to its forecast and near its historical highs. The forecast suggests Doge-Coin could reach as high as $5 in the coming weeks, indicating strong bullish sentiment. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the forecast high. An ideal entry price would be around $4.25, allowing you to buy in before the price potentially surges. The stop loss should be set at $4 to protect against any unexpected price pullback. The target price should be set at $5, aligning with the forecast high and maximizing potential profits. This long-term strategy aims to capture the sustained upward movement of Doge-Coin, taking advantage of the positive market sentiment and projected price appreciation. Given the price trends and forecast for Aptos, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a slight upward trend, but the forecast indicates a period of consolidation around $13. The support price is at $12.28, suggesting a potential floor for the price, while the resistance at $14.56 indicates an upper limit for the near term. Therefore, a long position could be considered, aiming to buy around $12.80, slightly above the support price, with a stop loss at $12.28 to minimize potential losses. The target price could be set at $14.20, aiming to capture a portion of the potential upside before reaching the resistance level. This strategy allows for potential profits while managing risk within a short-term timeframe. First, based on the provided price history and forecast for SE, a short-term investment strategy appears most suitable. The historical price data shows volatility, with recent fluctuations suggesting a potential for short-term price movements. The forecast indicates a downward trend in the coming week, aligning with the recent price decline. This suggests a bearish outlook in the short term, making a short position potentially profitable. Given this outlook, a short position on SE with an entry price near the current price of approximately 60 cents. The stop loss should be set slightly above the recent high of $0.698, around 70 cents, to protect against any unexpected upward price movements. The target price could be set at $0.563, which aligns with the historical lows and the forecast's projected decline. This strategy aims to capitalize on the anticipated short-term price decline in SE. Given the price trends and forecast for Ethereum Classic, a cautious investment strategy would focus on a medium-term approach. The historical prices show a volatile trend with recent fluctuations, while the forecast suggests a gradual upward movement. The current price is hovering near the support level of $19.66, indicating a potential buying opportunity. However, the resistance level of $37.17 suggests that significant upward momentum might be limited in the short term. Therefore, a long position is advisable, aiming to capitalize on the potential price increase towards the resistance level. An entry price of $31 would allow you to buy in at a relatively attractive price point. The stop loss should be set at $29 to protect against unexpected price declines. The target price should be set at $36, allowing you to take profits before the price reaches the resistance level, while still providing room for potential upside. This medium-term strategy aims to balance risk and reward, taking advantage of the forecast while mitigating potential losses. Given the price trends and forecast for Polygon, a medium-term investment strategy appears most suitable. The historical prices show a fluctuating trend with periods of both growth and decline. The current price is hovering near its support level of $0.5952, indicating potential for a price rebound. The forecast suggests a slight upward movement in the coming week, with prices potentially reaching around $0.669. Therefore, a long position on Polygon is recommended for a medium-term investment horizon. The entry price should be set at $0.598, slightly above the support level, allowing for some room for price consolidation before entering a potential upward trend. The stop loss should be placed at $0.585 to minimize potential losses in case of a sudden price drop. The target price can be set at 67 cents, aligning with the highest forecast price, allowing for a reasonable profit margin within the medium-term timeframe. Given the price trends and forecast for AEVO, a short-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating pattern with a recent dip, while the forecast suggests a continued downward trend. The price is currently hovering near the support level, indicating a potential for further decline before finding a stable base. Therefore, an aggressive short-term strategy would involve opening a short position at the entry price of $0.502, aligning with the current price and the anticipated downward movement. The stop loss should be set at $0.516, slightly above the entry price, to mitigate potential losses if the price unexpectedly rebounds. The target price should be set at $0.468, aiming to capitalize on the forecasted decline towards the support level. This strategy allows for a quick profit opportunity if the market follows the predicted trend, while the stop loss protects against significant losses in case of an unforeseen price surge. Based on the provided optimism price information, a short-term investment strategy appears most suitable. The historical price data shows fluctuations, but the recent price trend suggests a slight downward movement. The forecast price also indicates a decline over the next week, reaching as low as $2.49. Given this bearish outlook, a short position would be the most appropriate approach. An entry price of $2.56 aligns with the current price and the forecasted downward trend. A stop loss should be set at $2.66, slightly above the current price and the highest point in the recent price range, to protect against unexpected upward movements. The target price should be set at $2.34, considering the historical price lows and the forecasted decline. This strategy aims to capitalize on the anticipated price drop while managing risk through a well-defined stop loss. Based on the provided price information for STRK, a short-term bearish investment strategy appears to be the most suitable approach. The historical price data shows a recent downward trend, with the price dipping below the support level of $0.6163. The forecast also suggests a continued decline in the price over the next week, with the lowest predicted price being $0.657. This downward momentum, coupled with the price already being below the support level, indicates a potential for further losses. Therefore, a short position on STRK is recommended. An entry price of $0.654, close to the current price and the lowest forecasted price, would be ideal. A stop loss order should be placed at $0.675 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.594, taking advantage of the anticipated decline and leaving room for potential profit before reaching the next significant support level. This strategy aims to capitalize on the short-term bearish trend and generate profits from the expected price drop. Given the price trends and forecast for Solana, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, and the forecast indicates a continuation of this downward trend. Although the price is currently close to the support price of $213.67, the resistance at $230.53 suggests limited upside potential. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $229, aligned with the forecast and near the resistance level, would be ideal. The stop loss should be set at $231 to protect against any unexpected price recovery. The target price should be set at $215, slightly above the support price, allowing you to take profits before the market potentially bounces off the support level. Based on the provided Jupiter price information, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a volatile trend with recent fluctuations, suggesting potential for short-term price swings. The forecast price also indicates a downward trend in the coming week. Considering this, a short position would allow you to capitalize on the anticipated price decline. An ideal entry price for this strategy would be around $1.20, aligning with the forecast and allowing for a reasonable profit margin. The stop loss should be set at $1.28, slightly above the recent high, to minimize potential losses. The target price could be set at $1.13, aiming to capture a significant portion of the expected price drop. This strategy capitalizes on the short-term bearish outlook for Jupiter while managing risk through a well-defined stop loss. Given the price trends and forecast for render, a medium-term investment strategy appears most suitable. The historical prices show a general upward trajectory, with the recent price action consolidating around the $9 to $10 level. The forecast suggests a continuation of this upward trend, with prices potentially reaching $10 in the coming weeks. The support price at $8.729 provides a safety net for potential pullbacks, while the resistance at $10.276 indicates the potential ceiling for the near term. Therefore, a long position on render is recommended for a medium-term investment horizon. An ideal entry price would be around $9.40, allowing you to buy in at a relatively attractive price point. The stop loss should be placed at $8.80, protecting against any significant downside movement. The target price could be set at $10.20, aiming to capture a substantial portion of the potential price appreciation. This strategy capitalizes on the bullish outlook for render while managing risk effectively. Based on the provided price information for Solana name service, a short-term investment strategy appears to be most suitable. The historical price data reveals a generally upward trend, but the recent forecast suggests a slight pullback. This presents an opportunity to enter a short position, anticipating a price decline towards the support level of $0.2522. The entry price for this strategy should be around $0.342, slightly above the current price, allowing for a small margin of safety. The stop loss should be set at 36 cents, above the recent resistance level of $0.3921, to limit potential losses. The target price for this short position would be 26 cents, aiming to capture a significant portion of the anticipated price decline. This strategy capitalizes on the short-term volatility in Solana name service, aiming to profit from a predicted price correction before the market potentially rebounds. Given the provided historical price data and the one-week forecast for Doge-Coin, a medium-term investment strategy appears suitable. The historical prices show some volatility, but generally hover around the 42 to 44 cents range. The forecast suggests a slight upward trend, with prices potentially reaching around $0.436. This indicates a potentially bullish outlook in the medium term. Considering this, a long position in Doge-Coin is recommended. An entry price around $0.415 could be considered, allowing for a small margin of safety below the current price. The stop loss should be placed at $0.40037, the identified support price, to limit potential losses. The target price could be set at $0.467, aligning with the recent high and providing a reasonable profit target. This strategy allows for capitalizing on the potential upward momentum while managing risk through a defined stop loss. Based on the provided PEPE price data and forecast, a short-term bullish investment strategy appears promising. The historical price shows fluctuations, but generally trends upwards. The current price is near the support price, suggesting a potential for further upward movement. The forecast indicates a slight increase in price over the next week, aligning with this bullish outlook. Therefore, I recommend a long position on PEPE. An ideal entry price would be around $0.0000240, slightly below the current price, allowing for a potential entry point at a discounted rate. A stop loss should be set at $0.0000235 to minimize potential losses if the price drops unexpectedly. The target price could be set at $0.0000260, aiming to capture a significant portion of the forecasted price increase. This strategy capitalizes on the short-term bullish momentum of PEPE, aiming for a quick and profitable trade. Given the provided price data and forecast for SHIB, a short-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a general upward trend, with the recent price hovering around the support level of $0.0000258. The forecast suggests a potential rise towards the resistance level of $0.0000322. This indicates a bullish outlook in the short term. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current market price, with a stop loss placed slightly below the support level at $0.0000255 to minimize potential losses. The target price should be set at $0.0000310, aiming to capture a significant portion of the anticipated price increase. This strategy capitalizes on the potential for a quick price surge within the short term, leveraging the positive price momentum and forecast for SHIB. Based on the provided historical price data and forecast for Dog with Hat, a cautious investment strategy with a medium-term perspective is recommended. The historical prices demonstrate a fluctuating trend with both upward and downward movements, suggesting a period of consolidation. The forecast indicates a slight downward trend over the next week. Considering these factors, a short position appears to be more suitable. An entry price of $3.08 aligns with the current price and the predicted downward movement. The stop loss should be set at $3.18 to protect against any unexpected upward price surges. The target price is set at $2.94, aiming to capture potential price declines towards the lower end of the forecast range. This strategy balances risk management with the potential for moderate returns in the medium term. Based on the provided information for Doge-Coin, the investment strategy should adopt a short-term perspective due to the recent price volatility and the forecast indicating a potential decline. The price history shows a downward trend, with the current price hovering near the support level. This suggests that the market sentiment might be bearish, and further downward movement is likely in the short term. Therefore, a short position on Doge-Coin is recommended. An entry price of $0.00835, aligned with the recent price action, would be suitable. The stop loss should be set at $0.0087, slightly above the current price, to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $0.007764, the support level, to capitalize on the anticipated downward movement. This strategy aims to profit from the potential decline in Doge-Coin's price within a short time frame, taking advantage of the bearish market sentiment and the support level as a potential price floor. Near Protocol shows a 2-week price change with fluctuations, but the forecast suggests a slight downward trend. Considering the historical price data and the forecast, a short-term investment strategy appears most suitable. The support price of $6.419 acts as a potential floor for the price, while the resistance price of $7.035 indicates a ceiling for upward movement. Given these factors, an aggressive short-term strategy would involve taking a short position on Near Protocol. A suitable entry price would be around $6.95, aligning with the recent historical price. The stop loss should be placed at $7.035, slightly above the entry price, to minimize potential losses if the price unexpectedly rises. The target price for this strategy could be set at $6.419, aiming to capitalize on the potential price decline towards the support level. This approach allows for potential profits while managing risk through a defined stop loss. Based on the provided internet computer price information, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a general upward trend, although with some recent fluctuations. The forecast indicates continued upward momentum, suggesting a potential for further price appreciation. However, the current price is nearing the resistance level, suggesting a possible consolidation or slight pullback before a further upward move. Therefore, an investment strategy involving a long position in Internet Computer is recommended. An entry price around $13.50, slightly below the current price, allows for some room for potential price correction before entering a long position. The stop loss should be set at $12.43, the support price, to minimize potential losses. The target price can be set at $14.66, the resistance price, aiming to capitalize on the anticipated upward movement. This strategy allows for a balanced approach, taking advantage of the potential for price appreciation while also managing risk through a defined stop loss. Given the injective price history and the one-week price forecast, a medium-term investment strategy appears most suitable. While the price has shown some volatility, the historical data suggests a general upward trend. The forecast also indicates a slight dip in the coming week, followed by a potential recovery. This suggests a buying opportunity at a slightly lower price point. Therefore, an investment strategy for injective would involve taking a long position. The entry price should be around $29, aligning with the potential dip in the forecast. The stop loss should be set at $28.17, the support price, to minimize potential losses. The target price could be $33.28, the resistance price, aiming to capitalize on the potential upward momentum. This strategy allows for a moderate risk-reward ratio and capitalizes on the medium-term bullish outlook for injective. BTC's price history shows volatility, with both upward and downward movements. The forecast suggests a decline in price over the next week, reaching as low as $579. This downward trend, coupled with the current price hovering near the resistance level of $712.80, indicates a potential opportunity for a short position. Therefore, an aggressive investment strategy would involve taking a short position on BTC. The entry price should be set at $633, aligning with the first forecast price. The stop loss should be placed at $653, slightly above the current price, to limit potential losses if the price unexpectedly rises. The target price could be set at $587, the lowest forecasted price, allowing for a profit if the predicted decline materializes. This strategy capitalizes on the anticipated price drop while managing risk through a well-defined stop-loss order. Based on the provided THETA network price data, a short-term investment strategy appears to be the most suitable approach. The 2-week price change shows a slight downward trend, and the 1-week forecast suggests further decline. While the historical prices indicate some volatility, the current price is relatively close to the support price of $1.368, suggesting a potential bounce. Therefore, a short position with a conservative entry price of $2.50, slightly above the current price, would be advisable. This allows for a buffer against any unexpected price surges. The stop loss should be set at $2.60 to limit potential losses if the price unexpectedly rises. The target price could be set at $2.30, aligning with the forecasted price decline and providing a reasonable profit margin. This strategy capitalizes on the anticipated downward momentum while mitigating risk through a well-defined stop loss. Based on the provided price history and forecast for WorldCoin, a cautious investment strategy would be advisable. The historical price data reveals a volatile trend, with fluctuations ranging from $2.84 to $3.91. While the recent price has dipped, the forecast suggests a gradual upward movement over the coming week. Considering this mixed outlook, a medium-term investment approach appears most suitable. Therefore, a long position would be recommended, aiming to capitalize on the potential for price appreciation. An entry price of $3.13, aligning with the current price, would be appropriate. To manage risk, a stop-loss order should be placed at $3.07, slightly below the recent lows. The target price could be set at $3.40, reflecting the forecast's projected high point, allowing for potential profit while acknowledging the inherent volatility of the market. Given the price trends and forecast for Hooked Protocol, a medium-term investment strategy appears to be most suitable. The historical prices show a recent dip, with the current price hovering near the support level of $0.521. The forecast suggests a gradual upward movement, with prices potentially reaching $0.609 in the coming weeks. This indicates a cautious bullish outlook, suggesting that Hooked Protocol could be a good investment for those seeking moderate returns over a medium-term horizon. Therefore, a long position is recommended for Hooked Protocol. An entry price of $0.572 aligns with the current price and the potential for an upward trend. A stop loss at $0.521, the support level, protects against significant downside risk. The target price should be set at $0.609, the highest forecasted price, allowing you to capture potential gains while minimizing the risk of missing out on further upward movement. Based on the provided Artificial Superintelligence Alliance price information, a short-term investment strategy appears most suitable. The 2-week price change shows a volatile trend, with recent fluctuations suggesting a potential for short-term price movements. While the forecast indicates a slight downward trend over the next week, it remains relatively close to current price levels. This suggests an opportunity to capitalize on short-term volatility. Therefore, an investment strategy focusing on a short position is recommended. An entry price around $1.85, slightly above the current price, allows for a small buffer while still capturing potential downward movement. The stop loss should be set at $1.93, slightly above the recent highs, to protect against unexpected price reversals. The target price could be set at $1.72, aligning with the historical lows and providing a reasonable profit potential. This strategy aims to capitalize on short-term price fluctuations while managing risk through a well-defined stop loss. Given the price trends and forecast for Polkadot, a moderately aggressive investment strategy would focus on a medium-term approach. The historical prices show a slight upward trend, with the current price hovering around the support level of $8.975. The forecast suggests a gradual decline over the next week, but it still indicates prices staying above the support level. This suggests a sideways to slightly bearish trend in the short term. Therefore, a short position is advisable to capitalize on the potential for a price decrease towards the support level. An entry price of $9.07 would allow you to enter the trade near the current price, with a stop loss set at $9.28 to protect against any unexpected price surges. The target price should be set at $8.97, slightly below the support level, allowing you to take profits before the price potentially bounces back. This strategy aims to capture a modest profit within a medium-term timeframe, taking advantage of the anticipated downward pressure while mitigating risk with a well-defined stop loss. Given the price trends and forecast for Filecoin, a medium-term investment strategy appears suitable. The historical prices show a fluctuating trend with recent dips, while the forecast indicates a potential upward movement towards the end of the period. The support price at $3.856 suggests a potential floor for the price, while the resistance at $7.862 represents an upper limit for the foreseeable future. Considering this outlook, a long position is recommended to capitalize on the anticipated price increase. An ideal entry price would be around $6.50, allowing you to enter the market at a relatively attractive point before the potential price surge. The stop loss should be set at $6.20 to limit potential losses if the price drops unexpectedly. The target price can be set at $7.50, aiming for a significant profit margin while staying below the resistance level. This strategy allows for a balanced approach, mitigating risk while maximizing potential gains in the medium term. Based on the provided historical price data and the 1-week forecast for Conflux, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a fluctuating trend with a general upward bias. However, the recent price dip suggests a potential consolidation phase. The forecast indicates a slight upward movement, aligning with the historical trend. Therefore, a long position on Conflux is recommended for a medium-term investment strategy. The entry price should be around $0.215, aligning with the current price and the support level. The stop loss can be set at $0.202, below the recent dip and the immediate support level. The target price can be set at $0.252, targeting the resistance level and potential upside based on the forecast. This strategy allows for capitalizing on the potential upward momentum while mitigating risk with a defined stop loss. Ethereum name service shows a 2-week price change that has been fluctuating, but overall trending slightly upwards. The 1-week forecast suggests continued upward momentum, with prices potentially reaching $46. The support price of $20.53 is far below the current price, indicating a strong foundation. The resistance price of $43.13 is relatively close, suggesting that further upward movement might face some resistance. Given this information, a short to medium-term investment strategy with a long position seems appropriate. To implement this strategy, a potential entry price could be around $41, aligning with the recent price range and providing room for price appreciation. The stop loss should be set slightly below the recent lows, around $39, to protect against unexpected downward movements. The target price could be set at $43, aiming to capture a portion of the potential upward movement towards the resistance level. This strategy allows for participation in the potential upside while managing risk through a well-defined stop loss. Based on the avalanche price history and forecast, a short-term bullish strategy appears promising. The historical price data shows a generally upward trend, with recent fluctuations around the $50 to $53 range. The forecast suggests a continued upward movement, with prices potentially reaching $54. The support price at $44.92 indicates a strong base for potential growth, while the resistance at $54 suggests a ceiling for immediate gains. Considering this outlook, a long position in Avalanche is recommended for a short-term investment horizon. An aggressive entry point could be around $51.50, aligning with the recent price action and the forecast's upward trajectory. A stop-loss order placed at $50.50 would protect against potential downside risk. The target price could be set at $53.50, aiming to capitalize on the predicted price increase and reach the resistance level before any potential pullback. Given the historical price trends and the forecast for Bitcoin, a medium-term investment strategy focusing on a long position appears promising. The historical price data shows a gradual upward movement, with recent fluctuations around the 6 cents mark. The forecast predicts a continued upward trend, reaching approximately $0.064 within the next week. This suggests potential for capital appreciation in the medium term. Therefore, an investment strategy for Bitcoin would involve entering a long position at the current price of around 6 cents. A stop-loss order should be placed at $0.056, below the recent support price, to mitigate potential downside risk. The target price could be set at 7 cents, aiming to capture a significant portion of the projected price increase. This strategy allows for a balance between risk and reward, capitalizing on the positive price momentum while safeguarding against potential market reversals. Based on the provided information for PENDLE, a short-term investment strategy appears to be the most suitable approach. The 2-week price change demonstrates a volatile, but generally upward trend. While the forecast predicts a slight decline over the coming week, the historical price data suggests PENDLE has a tendency to rebound quickly. This volatility presents an opportunity to capitalize on short-term price fluctuations. Therefore, an investment strategy would involve entering a long position at the current price of around $6.12, aiming to profit from a potential price increase towards the resistance level of $6.738. The stop loss should be set at $5.89, the recent support level, to limit potential losses. The target price could be set at $6.50, allowing for a reasonable profit margin while still leaving room for further price appreciation. This strategy leverages the short-term bullish momentum observed in the price history and forecast, aiming to capture gains within a relatively short timeframe. Given the price trends and forecast for the sandbox, a medium-term investment strategy appears most suitable. The historical prices demonstrate a volatile, but generally upward trajectory, with recent fluctuations suggesting a potential consolidation phase. The forecast predicts continued upward movement, albeit with some short-term fluctuations. This suggests a period of sideways movement before a potential breakout. Therefore, a long position is recommended, aiming to capitalize on the expected long-term growth. A strategic entry point could be around $0.750, slightly below the recent resistance level of $0.9168, allowing for potential upside potential. A stop-loss order should be placed at $0.699, the identified support price, to limit potential losses. The target price could be set at $0.900, aiming to capture a significant portion of the anticipated price appreciation. This approach balances risk and reward, allowing for potential profits while mitigating potential downsides. The provided price data for Decentraland suggests a recent decline after a period of growth. The historical prices show a peak around $0.771, followed by a drop to the current price range. Although the forecast indicates a potential increase in the coming weeks, the volatility and recent downward trend warrant a cautious approach. Considering the price history, support level at $0.5921 and resistance at 65 cents, a short-term investment strategy focusing on a short position appears prudent. An entry price around 65 cents, aligning with the resistance level, could offer a favorable opportunity to capitalize on potential price corrections. A stop-loss order placed slightly above the entry price, around 66 cents, would limit potential losses. The target price could be set at $0.5921, the support level, aiming to capture a decent portion of the potential downside movement. This strategy acknowledges the recent price decline and aims to profit from a potential further correction in the short term. ENG coin shows a recent downward trend in its 2-week price history, with the forecast predicting further declines in the coming week. This bearish outlook suggests a short-term investment strategy could be profitable. A short position on ENG coin appears to be the most suitable approach given the anticipated price decrease. The current price is close to its resistance level of $0.3275, indicating a potential for a pullback. To execute this strategy, an entry price of $0.325 could be considered, allowing for a quick entry into the short position. A stop loss should be placed at $0.336 to protect against any unexpected price surges. The target price could be set at $0.285, aiming to capture a significant portion of the anticipated decline. This strategy capitalizes on the short-term bearish momentum of ENG coin, aiming to generate profits from the predicted price drop. Based on the provided price history and forecast for Uniswap, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a general upward trend, with recent fluctuations around the $17 to $18 price range. The forecast also indicates continued upward momentum, suggesting that Uniswap might reach prices closer to $18 in the coming weeks. Considering these factors, a long position is recommended to capitalize on this potential price increase. To execute this strategy, an entry price of $17.50 could be considered, allowing you to enter the market as prices stabilize after a recent dip. A stop loss could be placed at $16.80, ensuring a reasonable margin of safety against potential market reversals. The target price should be set at $18.50, aiming to capture the full potential of the upward forecast and allow for a healthy profit margin. This medium-term approach allows for sufficient time to ride the potential upward wave while mitigating risk through a well-defined stop loss. Given the price history and forecast for Chainlink, a medium-term investment strategy appears most suitable. The historical price shows a steady upward trend with recent fluctuations. While the forecast predicts continued growth, reaching up to $30 within the next week, it's prudent to avoid overly aggressive short-term bets. A medium-term approach allows us to capitalize on the anticipated price increase while mitigating the risk associated with short-term market volatility. Therefore, an ideal strategy would involve a long position in Chainlink. We should aim to enter the market at around $25, a price point slightly below the current historical high and near the support level. Setting a stop loss at $24 would help protect against unexpected price drops. Our target price should be set at $29, aligning with the upper end of the forecast and offering a reasonable profit margin. This approach balances risk and reward, allowing us to participate in the potential upside of Chainlink while safeguarding our investment. Based on the provided information for Aave, a bullish investment strategy appears promising. The historical price data reveals a consistent upward trend, with prices steadily increasing over time. The forecast further reinforces this positive outlook, predicting continued growth in the coming weeks. Considering this trajectory, a long position in Aave is recommended. An ideal entry price would be around $280, capitalizing on the current price level while allowing for potential upside. A stop-loss order should be placed at $269 to minimize potential losses in case of an unexpected price reversal. The target price should be set at $340, aiming to capture a substantial portion of the anticipated price appreciation. This strategy aligns with a medium-term investment perspective, allowing for a balance between risk and reward. EOS's historical price data reveals a volatile trend with both upward and downward movements. The recent price action shows a slight upward momentum, with the price hovering around the support level of $1.0414. The forecast suggests a continuation of this upward trend, with prices potentially reaching $1.24 in the coming weeks. Considering this, a long-term investment strategy appears suitable for EOS. An entry price of $1.09, slightly above the current price and the recent support level, would provide a good starting point. A stop-loss order should be placed at $1.0414, the identified support level, to minimize potential losses. The target price should be set at $1.3333, the resistance level, allowing for significant profit potential if the forecast proves accurate. This strategy capitalizes on the anticipated upward momentum and aims to capture substantial gains over the long term. Based on the provided data for Tron, a medium-term investment strategy appears to be the most suitable approach. While the historical price data shows volatility, the recent downward trend suggests a potential for a short-term correction. However, the forecast indicates a gradual upward movement over the next week, suggesting a potential rebound. Therefore, a long position is recommended for a medium-term investment horizon. A strategic entry point could be around $0.280, aligning with the recent support level and offering a potential entry before a price increase. The stop loss should be placed at $0.262, the identified support price, to minimize potential losses. The target price could be set at $0.318, the recent resistance level, aiming to capitalize on the potential price increase projected in the forecast. This strategy allows for a balance between risk management and potential profit maximization within a medium-term timeframe. Based on the provided information for Suncoin, a short-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a volatile pattern with recent fluctuations. While the forecast suggests a slight upward trend, the price remains relatively close to the support level, indicating potential for a pullback. Therefore, an investment strategy focused on a short position with an entry price around $0.0245 would be appropriate. The stop loss should be set at $0.0255 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.0230, anticipating a decline towards the support level. This strategy capitalizes on the potential for a short-term correction while mitigating risk through a well-defined stop loss.